We'll just give everyone a couple of minutes to join in. Okay, everyone, respecting everybody's time, I'll just jump right into it. My name is Anna Momar. Welcome, everyone who is joining. I think there's some people still joining for this webinar. I, um, I thank you all for taking our time to join us today to attend this webinar series. The topic for today's webinar is beating your real estate investing fears, and this is a webinar series that's pretty much geared towards passive, some teaching which is geared towards physicians, particularly, or any high-income professionals who are interested in passive investing. If you would like slides to this presentation, just text us on this number. It's 281-559-7061. You can ask any questions or text us for a link towards for our slides. You will, however, if you're registered for this webinar, you will get all the recording within 24 hours to your email as well. So this is something that you could watch later as well. A little bit going over a disclaimer, which I always do before my webinars. This webinar is for education purposes only and should not be considered legal or accounting or investment advice. The information in this webinar does not represent an offer to sell or solicitation of an offer to purchase an investment or securities. We highly advise all of you to consult your own attorneys, financial advisors, and CPAs for any legal matters, any investment advice, and just to go over all investment options that you're thinking of prior to making your decisions. Particularly, any tax-related questions would be addressed towards them as well. A little bit about us. So my name is Anna Momar. I am a co-founder and director of business development here at Cadbury Capital. I actually am a gastroenterologist by profession, and I work here in Houston Methodist. With my husband, Sid Shamim, who's the founder of Headway Capital, we came around coming up with Headway Capital back in 2017. Prior to that, prior to Headway Capital, we were doing a lot of single family. We had a lot of single family properties that we were managing. We had a huge portfolio. But essentially over years, we just kind of realized that it wasn't building the momentum that we had expected for ourselves. We were investing more time and getting less out of them. And, like most people, single family is the way to start, and that's how we did as well. But back in 2017, we came up with Headway Capital with the sole purpose of finding a platform to basically channelize our own earnings and find a platform for our own investments. And over years, we have grown exponentially. We will go over a little bit about our stats, what Headway Capital is doing, and what we are foreseeing for the near future. A little bit about our core team. So we have Brian Alfaro here. I know this presentation says Brian because he is the director of investor relations. He manages all these webinars as well. And even though it says Brian Alfaro here, but my name is Anna Momar. So just want to make sure that you a little bit of that disclaimer. So Brian Alfaro is director of investor relations, a fund of knowledge. He knows it all. He has done single family. He has done multifamily. He is the person that most of us you would make your first phone call with mostly. He goes over goes over all investment opportunities with you, sees if you are right fit for us and if we are a right fit for you as well. Any sort of initial investment related questions, he is the point of contact. So really, Brian is the person that you will be speaking to mostly before sort of an investment is made. Afterwards, Omar Naqvi is our Chief Financial Officer and Investment Officer. He's the one who will be sending you your bi-weekly and monthly reports. He's the person to reach out to for any investment-related questions once that investment is made. What's happening with your money? What are the projections? If you have any questions or concerns, he is the person, the point of contact. So a little bit about Headway, what our core values are and what we stand for. So I think something that we take pride in is transparency. So despite whatever happens, we try to be very, very transparent with our investors. We have over 500 investors who are actively investing with us and continue to invest in future. And we keep them informed, whatever the market is doing, however things are turning, our investors are very, very, very well informed with it. We have an open door policy, us, we're easy to reach. You can reach out to us, answer any questions. You can visit the properties. We make sure that we conduct tours with you or make adjustments for you to have a meeting with us if you have any questions or concerns that come up through the process. We make sure that you have confidence in us, and we would like to establish and maintain a long-term trust, long-term relationship. So that's what we're aiming for. So we are here for you. We are here to answer any questions. One of Headway Capital's core value is integrity. We are committed to being honest. We're committed to being ethical. There are no shortcuts. You will get your reports. You will be able to reach out to us with any questions that you may have. And we try to make sure that the operations are very lean, they're very streamlined, and that there is no complexity and there's no confusion. You know where your money is going, what's happening with it, what will happen with it in future, and if there are any questions, we're here to answer them for you. We take pride in being accountable. We are responsible for our actions and performance of our properties. We vet our properties really thoroughly before we, of course, finalize the deal and reach out to our investors as an investment opportunity. But after that, what happens with that property and what happens with that investment, you are accountable, we are accountable to you, and we make sure that we place you first. Our investors are first. We make sure that you're getting your returns first before we get our money from our property. That's the only way we have been able to establish long-term relationships with our investors. Our investors continue to invest with us, which is why every time we have a new deal open up, we do usually find it that it's very attractive to our current investors. However, Headway Capital we are trying to expand, we are trying to add more people to our family. And that's how you grow, that's how you build a momentum for yourself, and that's what we're looking for. So I think we've been very lucky with our current family, and we value each and every one who's a part of Headway Capital team, and we hope to maintain a long-term relationship with all of them. So the Headway difference, this is our portfolio. So we have upwards of 500 million plus assets which are owned and managed by Headway Capital. That's more than 3,000 units which are currently being managed. We have a projected 25 to 30% average annual return. This is something we will go over in a little bit, but this is a number that you should remember. This is when you're deciding, trying to figure out which investment opportunity is right for you. This is the number that you're looking for. You are looking for what the average annual return would be on your investment. So Headway Capital, our projected average annual return is between 25 to 30%. And we have it's about, at this time right now, this slide is a little bit old, but we have about 500 plus active investors and investing partners and currently who are investing with Headway Capital. And of course, the family continues to grow. So, jumping into our webinar today. So now that you know a little bit about us, of course, just to know more about us, you would like to talk to us, you would like to meet us, all of these arrangements can be made. We do bi-weekly tours, arrange them so that that allows us to kind of visit our assets with our current investors, with our any potential future investors as well. And that, the deal is yours. You can visit it. You can make sure that the operations are running the way you would like them to. And of course, you can touch, feel your own asset and see what you have invested into and how that is performing. And that is for current as well as future investors. So we have those tours that are planned for you, and you could sign up for them. So our webinar is about beating your real estate investing fears, and how would you do that? So this is something that I frequently come across, when I'm talking to other physicians. Of course, those are the people that I usually meet and interact with. But this is something that's very, very often that I come across. As a physician, we're risk averse. Our profession teaches us to be risk averse. We are try to make very secure decisions for ourselves. And we have a lot of fears. The common fears are fears of losing money, fear of making mistakes, fear of market volatility. What if something happens? What if we lose a ton of money? And also lack of control. Now, as a physician, I do understand the time limitations that we have. All of us do not have our jobs mostly unless you are part-time or have maintained a very strict sort of a balance for yourself. Our jobs are mostly very, very, very exhausting, and very time consuming. And with all of that, it leaves us very less time to actually sort of go over things that are outside of your work and that don't involve your family, like investment. One needs a lot of time and a lot of research to actually understand understand which investment opportunity is best for them, to actually understand what deal works for them, to actually make sure that this investment opportunity is going to make them money. They're not just blindly putting money that they've earned with a lot of hard work just into anything. So I think that lack of time to study, to research, I wish medical school would should have taught us this, but unfortunately it does not. And because of this, we as physicians are just not good with investment. I mean, every time I do come across somebody who I can have maintain a conversation with, it's not every day who is actively looking at a lot of investment opportunities, or knows the market and knows how things are going. But usually I do come across people who are starting or who would like to start but just haven't made their first step, or who are completely relying on retirement accounts, on IRAs, and that's what their retirement plan is, and that's what they're doing. So I feel like the common fears are very hard and difficult to get over with, but the only way to really address them would be education. Education is the best way to get over your fears. I just through being with a partner who actually had a lot of knowledge. I think I learned a lot during the process. And our usual home conversations would sort of circle around it, but I still did read a lot. Read a lot of books, attended a lot of webinars, like similar to this one. And as you get more into it, you will be sort of attending more complex webinars with more complex information. And education is the best way to kind of learn more, to get over your investment anxiety, to get over your fears. But regardless, I would tell you, you have to start somewhere. And if you're just going to wait to get all the information in the world and education in the world, it's very hard to get and know everything. And it's very hard to feel 100% secure. Sometimes one needs to take a little bit of a risk, test a little bit of their luck, As long as they have trust in their operators and trust in the people they're investing with, it's ultimately the way the market does. It's almost, there are so many unknowns still, even if you get all the education in the world. So you have to start, and it's it's time sensitive. Your money is depreciating every single day. Inflation is happening. So you just have to understand that you have to start, and it's you have to start somewhere. When passively investing for the first time, you may be fearful of investing with the wrong operator. Of course, that is the biggest one. I think you need to find the right operator and the right people that you can trust. It's just like finding your right doctor. You, till you feel that you have, even if a physician may not be the best at what he's doing, but if you trust him, a lot of times patients do feel better. So I feel like finding the right operator, the right person that you trust, having that relationship, that rapport with him is really, really important. You may be fearful of investing in the wrong project. That, of course, is a lack of education, and of course, lack of ability to vet a deal. And if you are investing with the right operator, he will not give you or offer a subpar deal to you regardless. Like, he would have done his due diligence because he is the specialist in that field, and he would not offer you something that would not work. And does not work with your goals and would just not perform in future. There's fear of lack of understanding. There's fear of lack of control over an investment. There are concerns about liquidity. What if you invest all your money and it's stuck for long term? There's concerns of time commitment. How long is your money invested? When will you get it back? When are you going to start getting the returns? And there's fear of market instability. We've been seeing that. Um, since a long time. Market has been unpredictable. Market has been very unstable for a while. And I do understand and recognize the fear of market instability. So that's there. There are different strategies that mitigate risk in passive investing. Number one and foremost, even in real estate, of course, I do advise all my investors to diversify their investments. So I would make sure that you are investing 100% into your retirement accounts and max that out. Make sure you are getting your, whatever your employer or is offering, you are able to get that added to your investment account and retirement account as well. You max out your Roth, you should be able to invest a little bit into IRAs. But as long as, but you have to understand that even, 401k or these retirement accounts, they are equally susceptible to market instability as well. And that kind of market instability may be much worse than the instability that's there in real estate, even though you may not recognize it, because as a younger person or younger physician or younger employee, you probably do not think of what is going to happen after you turn 65 and where market is heading. You just kind of feel secure that my money is invested in a retirement account, and it's there and it's secure. It may not be, it may not be when you're ready to retire. That may not be the right time to pull your money regardless, because market is not doing very well at that time. So it's really important to understand that even though there's instability or possibility in real estate, it is the instability is much less compared to other investment opportunities out there as well. Despite that, we do recommend that you diversify across different property types, Class A versus Class B versus Class C. These are different classes of assets, Class A being the best and Class C being, of course, being a lower class property. So you should diversify in your investment into different classes. And at some time a particular class outperforms the other, and you may get higher returns, irrespective of which class they belong to. It doesn't mean that a Class A property would actually outperform a Class C property. It just depends. So as long as it's the right deal, but regardless, we do recommend that you diversify your investments. You just do want to make sure that you're not putting all your dollars into one deal. So you do want to make sure that you are dividing it. Sometimes people have asked me, do I invest $500,000 into this particular deal? I would recommend against that, because that just means putting all your eggs in one basket. What if the deal does not perform well? So you just have to make sure, I mean, not perform well. Hopefully it does perform, but not perform as much as you would expect it to. But we do recommend that you divide your investments into multiple different deals. And you have to do your due diligence. I think the first and most important thing is you have to vet the correct operator. You have to find the right operator who is transparent, who is there to answer any questions, who's reachable, who is there, who feels accountable, and feels responsible for your money, and who himself is invested into the deal itself. So I think that's we take pride of. We are there for you. We are there to answer any questions, and we are invested personally into all our deals. So all our deals, we are actually we are the major investor in all our deals. And if the deal does not perform, we lose our money as well. So, I think one way to reassure our investor is that they see that our money is being put into the deal as well. And that's the only way that you can justify that your investor, and that's the only way to actually get your investor to be from our perspective, to be confident in the deal, because we are confident enough in the investment opportunity that we're investing our own money into it as well. You have to make sure that they have a business plan in mind, and you have to make sure that the property is in the right location and the right market. You have to kind of do a little bit research around the area, make sure it's like stationed at the right location. There are schools close by, there are businesses close by their work opportunities. They have some sort of shopping areas, they have some sort of recreational areas, and that makes the property very attractive to renters as well. And you have to see the portfolio of an experienced operator, what their other properties have done in the past, how they have performed, and what their business plan is for future. When you are selecting the best multifamily investment property, it's important that you pick a property that, of course, whatever investment opportunities are offered to you, you look at the right, you pick an asset that's is in the right location, and you look at market trend around that location as well. You make sure you get, you discuss those market trends with your operator, what the neighboring properties are doing, how this asset is currently performing, what are your what's your vision, what are you going to do with it, how are you going to make this asset better, how are you going to increase rents, how are you going to improve the operating income, what's your business plan for this asset for future, and why do you have confidence in it? When you're evaluating financial performance and projections, you have to look for a couple of numbers. Firstly, you have to look at cash flow. What's the return on the cash that you are investing? So now this is cash on cash, which is essentially an annual return of all the return that you're getting on an investment, which includes the tax. So the entire return on investment minus the operating expenses, and that you divide it by essentially by the amount of money you invested, and get a percentage of what the percentage of return is on the amount of money that you've invested. You have to look at the average annual return. The average annual return is a little bit of a complex term, which is different from a preferred return. So commercial properties or not, or multifamily properties, depending on what kind of asset class you're investing into, it's usually longer holds. So these properties may sell in 3 to 5 years, or maybe longer, depending on market trends. And average annual return is the return that is per year after the entire property actually sells. Preferred return is the cash flow on the amount of investment that you get per year. So a preferred return would be a number that your operator would promise you that I'm gonna give you a preferred return of whatever, just pick a number, 5%, 8%, 10%, whatever that would be. That would be your preferred return. You're gonna get it into quarterly returns every year, and that would be your per year preferred return. That's the money that you're getting on your investment every year. But that is different from the average annual return, which is the return at the end of the final sale. So when when your asset sells after a long-term hold, after 3, 5, or so on, so many years, what is your complete return divided by the number of years that you have invested money into that asset? So it's the complete total return over the entire life of the investment. So that's the average annual return per year. And you have to look at that number because that's the number that makes you decide, okay, is this and my operator is promising you. So for Hedwig Capital, we have usually we have a predicted average annual return of about 25 to 30%. Now that's the return on your money that you will get per year at the end of your final sales. And you also have to look at the properties what is the property forecasted to sell at. So you have to look at the exit cap rate. That is the percentage of money, or it's sort of a way to calculate the net operating income on the property. And it just helps you decide how the property is performing, or how the property would, when you at the end of the final sale, how has the property performed over the years. So you definitely want to choose an investment opportunity that has a higher exit cap rate. And of course, it's very important to assess property management quality. Now, at Hedwig Capital, we take pride that we manage our properties ourselves. We don't have a third party property management company who manages our property. We manage all our assets ourselves. We have control over operations, and that allows our investors to have control over operations as well. You can give your advice. You are there, you see how things are working, and if there's something that you think needs to be changed, you can reach out to us, and since the property is being managed by us, we can make those changes accordingly. So I think we have a lot of control over our assets because of that. So how they're little steps at a time. So the first step would be for everybody who asks me about investment advice. I would say the first step, the best way to learn about investing would to be a passive investor. So being an active investor, which means that you own and manage the property, be it a single family property, regardless of what it is, there are a lot of growing pains. There's a learning curve. And I think depending on how busy your work is, or how much time you have to get educated, or how much time you have to actually manage, you may or may not make a lot of money during the learning process. So you may even lose money. And of course, some people have the option of having a spouse or a partner who has more time and can invest more time into managing their real estate portfolio. So that is always an advantage that they may have. But regardless, I think since you have to start somewhere, as long as you find the right operator, you find the right investment opportunity, I think it's reasonable to say that you should start investing passively. And during the process, you will learn a lot when you see your financial documents, when you review them, you will learn a lot during the entire process of being a passive investor. You can look at opportunities that are available with Hedwig Capital. We will go over a little bit, but your next step would be to join our investor community. We have an investor group that you would join. You need to be an accredited investor to join that group. And as long as you're a part of our preferred investor list, we will be sending you out all our new investment opportunities as soon as they come in, and you have the option to invest into them. So for our final statement, the passive investment opportunities that are available at Headway Capital would be distressed apartments, multifamily. We have great experience with them. Our multifamily units have done really well. We arrange bi-weekly and monthly tours for you to visit our multifamily properties, and you can actually see what happened, what's happening, and what will happen to them in future. So you have investment opportunities there. We are closing a deal currently, and the offering has been sent to our all the investors in our preferred investor list. We're very excited about that, and hope that it will be a successful deal for us. So if you're interested in investing in multifamily apartments, we have a deal going on right now, and you just reach out to us and we can go over that offering with you as well. Headway Capital also has a real estate income fund. Now, this is a very sweet fund, which could be the right fund for you if you are scared or fearful for investing long-term into an investment opportunity. The real estate income fund promises you a return of 8% on your investment, and this is liquid cash. So this is something that you can pull with a 3-month notice. So if you invest a certain amount of money, you get your 8% return on that money. And if you decide that I have something more important or more lucrative to invest into, you can give us a 3-month notice and pull your money out. Headway Capital also has investment opportunities in car washes. We did close a portfolio, car wash portfolio last year, and these opportunities keep coming. So once and that actually our car wash portfolio is doing really, really well. So we're very excited. Our investors have been very happy. And when a new deal comes in, you will be informed about that if you are a part of our preferred investor list. So the investing process would be, so first you will set up a preliminary call with it's usually with one of the members of the core team, usually with Brian. In that meeting, you can introduce yourselves, your goals, where you are in your life and your investment journey. And Brian, truly, I think that is a very informative informative call where you can ask him any questions and he would be available to answer them for you. Now, of course, during that call, Brian does determine if you need to be an accredited investor to be part of Headway Capital family, but he would determine if you would be a suitable fit as an investor with us. And of course, that call allows you the opportunity to figure out if we are the suitable fit for you as well. Once that call is made, you are invested and you qualify to be a part of the investor group, you will be reviewed by our committee, and then we send you a welcome email where you will be added to our preferred investor group. Through our preferred investor group, you will have options to sign up for any of our bi-weekly or monthly tours of our properties, where you can actually see what's happening with our assets. You can touch, feel, and see the operations, and as well as you will be the first person to know about any investment offerings. Now, you need to understand that these investment offerings do come by and go very fast. I think just being more proactive and more aggressive with checking your emails and sort of deciding once you've decided to actually be ready to invest would be the way to go. If you are interested to join our private real estate offering, as I said, you'll need to join our private investor group. We have tours, we have webinars, we have exclusive passive investment opportunities for everyone who is a preferred investor. This is the QR code. You can scan it. It will lead you to a form that you will need to fill. And once that is filled, you will be able to schedule an acceptance call with one of us to go over everything with you. And this is a little bit a QR code. You can scan it This will lead you to our Henry Capital Income Fund offering. You can learn more about the Henry Capital Income Fund, what we're doing, and how you can be a part of it. Again, if you would like these slides, please text us on this number. It's 281-559-7061. If you have any questions, text us. If not, we would be happy to see you next in two weeks for our next webinar. Again, if you have any questions, please reach out to us. This is our email. And thank you for being a part of this webinar series. Thank you.